with the Leon and I from Investing Education Academy. So today, some of you may know there was another rate hike, and some of you might be wondering, why does that even matter? Leon's going to tell you why it matters while I do a little bit of housekeeping.
Yep. So today was the famed Fed Day when the Federal Reserve raised rates. We've been talking about this now for 6 months, and we're going to be talking about it at least to the end of the year, probably into next year. Well, definitely into next year because okay, let's happen today. So today the Federal Reserve did what they said they were going to do. They raised rates by 0.5%, 50 basis points today, right? So they had telegraphed this move from like a month ago, so there wasn't a big surprise. The market didn't really go crazy around the when the actual rate hike happened. But as I posted earlier in our membership platform, I was like, hey, today's the day. Just be prepared for a lot of volatility. Luckily, the volatility was on our side. The volatility was on the upside. And the reason being is, like I said, when the rate was first announced, nothing really happened, right? The market knew it was coming. But what everybody really wants to pay attention to is Jerome Powell, who's head of the Federal Reserve, his conference afterwards. And the biggest thing that came out of that really was a question from a reporter at CNBC asked, is the Federal Reserve considering a 75 basis point raise, next raise or in the future? He said, as of right now, the Federal Reserve is not entertaining a 75 basis point raise. Now, you're 75, 100. What do these numbers actually mean? So basically, 75 is higher than 50, right? And as we've been saying before, every time when these rates go higher,
Real quick,
it
Leon,
becomes.
I think it's important to say when we say 75 basis points, that's still not quite 8%. It's not 1%. So you might want to just elaborate, so basis points, anything below 100 is not yet even 1%. However, traditionally what's happening right now hasn't happened for like 40 years. So
Right.
yeah, but just a
Yeah.
little
So
clarity.
like Mercy, to clarify what a 75 basis point is, it's just 0.75%. Like today they raised 50 basis points, which is half of 1%. So 75 basis point, just think of that as 0.75%. So yeah, good clarification. So the reason this is important is because, again, as these rates rise, other investment vehicles become more competition for the stock market. So if we went up 75 basis points versus 50 basis points, that makes bonds more attractive. Could make CDs more attractive. Could make money markets more attractive. So the stock market does not want these rates to rise fast because us as stock investors, we don't want big money pulling their money out and going to safer investments where there's really like no risk to get a kind of a decentish return. So when the Federal Reserve came out today, I said, hey, we're not even considering a 75 basis point or 0.75% raise at all right now. The market shot through the roof. It went from basically flat to up 3% in literally in 20 minutes. I mean, the market it was basically what they call a relief rally because going into the announcement, everyone was the reason they shot up so much because everyone was fearful that because the Federal Reserve has been very, very hawkish, which means they are being very aggressive in raising interest rates. The reason they're doing that is because inflation is out of control. So when you raise interest rates, that brings inflation down. So they've been like, look, we got to get this inflation thing under control. We are going to bash inflation over the head with these interest rates. So everyone was worried that they're going to come out with a 75 basis point, maybe 1% raise, which would have just totally, tanked the market. So the fact they came out and said, hey, we're not even considering a 75 basis point or 0.75% raise right now. We're only worried about 50 basis points or 0.5% raises. The market was like, woohoo, hooray! Like we don't have to worry about this massive tightening cycle happening us or hitting us over the head right now. So the market really shot up. Like I said, it shot up about 3% when it was announced. Now, I look at that as what they call a false flag, right? And what I mean by that is, I don't believe the 3% jump today, right? That was really just the market saying, whoo, he didn't come out and give us a 75% raise. But let's see what happens tomorrow once the market digests. Rates are still going up. Oh, and here's the other thing, right? So today was a 50-point raise. So what the market is always looking for is what's happening in the future. He said the next two raises will be 50 basis point raises or 0.5%. So there's a raise in June and then July. So both of those are going to be half a percent raises. Now, the reason that's a bad thing is, again, well, it's not a bad thing. It just is what it is. The reason it could affect the market, the stock market, is because, again, as these rates go higher every month, other assets become competition for the market. The reason it's a good thing is because the market now has clarity on what's coming in the future. The market is always looking at the future about earnings and even about interest rates. So it was a good thing that he laid the kind of the groundwork or the roadmap of what's coming. So the market can now do whatever it's going to do without any real surprises. They know 50 basis point rates are coming. And then there's June, July, August. There's no meeting in August. So in September will be the third one. We have no idea what the third one's going to be. What the Fed has said is after today, and they have two more, they're going to be what's called data dependent. All that means is when the inflation numbers come out, how much is inflation up or down over the last year. If they start to see that ticking down, getting lower and lower and lower each month, they may revert back to just raising 25 basis points or 1/4% versus 50. So saying all that, it was a good meeting because one, we got clarity on the roadmap for the next 2 months, what the Fed is going to do. But also it's kind of a bad thing because we know rates are going to go up a full 1% over the next 2 months. That again, we half of 1% over the next 2 months. 1% total, but 0.5% each month over the next 2 months. So the market has to digest all that.
So for anybody who's wondering, why does this happen? Why does the market react the way it does? Why does my portfolio look, a raise happened before, but my portfolio didn't go up? Why is it going up now versus the last time you saw a raise?
Well, hold on. It actually did. So the day of the raise, the day after the raise, the market shot up. But then over the next couple of days, it gave it all back. So
I think it was the day after.
I think it was the day after. Yeah. Yep.
So it wasn't the day of, and right. I'm not sure what time the announcement came though, because that could affect the time.
It's at 2 p.m.
Yeah. So again, if you're wondering, last time, well, why then not now? The one thing the market just can't stand, and this is just a behavioral pattern of the market. The market hates to not know. Uncertainty in the market is the worst thing. If the market knows what's coming and can prepare for it reasonably, normally the market is happy with that. But again, when the market just doesn't know what's happening and the Fed wasn't committing in any exact direction, and we didn't know if it'd be 3/4 of a point, a half a point raise, and so the market was kind of on the edge of the seat, what's going on. And then again, like Leon said, with the confidence coming at the end during the discussion, confidence, that was a key word that Leon said. When the market sees and understands that there's confidence about the direction, and honestly, sometimes it doesn't even care what direction. That's why also times in election years, the market tends to drop because the market just doesn't know who's going to win. As soon as the market knows who's the front runner, or if it's close, the market will stay uncertain as long as the race is uncertain. Just a lot of things. I mean, it's a million examples, but just in general, just understand the market just wants to know what's going on. So what does this mean for you all? What does this mean for your money? What does this mean for you all as an investor? Still stop invest. Well, this is Leon and I's thing. This is not the immediate. This is not individual stock advice. Everybody should kind of take their own approach to how they manage their portfolio. Do your own research. However, Leon and I feel very strongly that you shouldn't be investing in speculative investments right now. For those of you all who are day trading, naked options, whatever it might be, that can really hurt you, this isn't the time to play that game. This is not the market for that. And some of you all think, oh, well, I know what directions the market is going in, so I know exactly what to do. That doesn't speak to the individual stocks inside the markets, where sometimes behavior doesn't match what's going on in the marketplace. So just be very careful. I think you want to buy quality stocks. You want to look at stocks. I'm personally looking at a lot of dividend plays, looking at companies that have solid earnings. But I am keeping what Leon calls dry powder to the side for those opportunity buys out there, and they're happening all over the place. So you have to pay attention to opportunity buys in the stock market.
Yep. And I just want to clarify one thing I said. So Powell said that they possibly, what he said was 50 basis point raises are on the table for the next 2 months. He didn't say they will raise 50 basis. They said they don't make the decision to the meeting, but I mean, he's basically telling the market, okay, it's going to be 50 basis points, but I can't say that. But he said they're on the table. So and he said the same thing last month about this month, and they raised 50 basis points, so or half of 1%. So we're pretty much assured that the next 2 months we'll get half a point each month, which means a full 1% raise of interest rates over the next month. And also, this is important not only to your portfolio, stock portfolio, but just in life, right? Like if you have credit cards, if you have variable or like ARM-based mortgages, car loans, I mean anything that has a variable rate, you're gonna start to feel you're gonna start to feel the effects of rates rising because your monthly payments are gonna go up as your interest rate rises. So these interest rate rises are not just about the stock market totally. I mean, for us, that's the main thing, but generally also look at your life in general, credit cards, debit cards, any debt that you have outstanding that's not a fixed
Loans in
rate.
general.
Yeah, loans in general that's not a fixed rate. Your costs are going to start going up every month, or probably have already started going up every month. I
Money's
mentioned
more
last week.
expensive.
I mentioned last week I've noticed my credit card interest rate, the amount of interest I'm paying per month has gone up considerably over the last, I'd say, 4 or 5 months. So I'm already seeing the effects of interest rates rising. So definitely pay attention to your debt that you have outstanding, because this also affects that too.
Everybody, we owe you all two things, and it's stock pick and a currency pick. So if for those of y'all who want to get one of them, you can go over to Investing Education Academy on Facebook, search our group, and we'll pop up. If you already have us saved as a favorite, pop into the group by tomorrow, and you will have one of our picks. For those of you all who like, what, I want both the picks. I don't want just one. Please log into the IEA platform, and you can go to IEAmembers.com, log in, and what area is it in, Leon? What's it called?
So that is in the so when you log in, you'll see it at the top. It'll say I think stock picks of the week or picks of the week.
Okay.
You'll see that like a banner at the top. Just click on that, and you'll find the ones for this week. And then if you're insider or above membership, you can see all of our picks for the past year and a half, 2 years that we made. Mm-hmm.
And it's an interesting list to look at. I look at it in some of my picks. I'm like going through it just to kind of see what do we pick, what is it, what's changed. But this is a good time to look at your portfolio. Some of you all, I know, I get it. You want to stick your head in the sand and act like none of this is happening. And you're like, I'm a long-term investor, so I don't have to look at my portfolio. That's not true. This market is changing the way companies are run. So you want to go back and look at your portfolio, because this probably isn't going to end in anytime, in the short term. So you want to make some adjustments. Again, Leon and I always talk about 3, 5, 10 years out. So some of you all like, what are you talking about? You all always say, long term. Real fine. Bottom left, upper right. Don't be stupid. Like sometimes you just have to change your portfolio. So if you don't have a professional working with you, I suggest you join Investing Education Academy. If you want to reach out to Leon and I, you can, and we can have a discussion. But this is the time where you want to revisit not only your stock portfolio, your 401k at work, your 403b, your 457 plan, your IRA, your Roth IRA, your KEOs, your profit sharing plans, all these things you want to spend some time, review them, and make smart decisions right now. Because
and I say a perfect example of what Brent's talking about is a lot of people did a lot of buying of stocks during COVID, 2020, 2021. A lot of those positions are down anywhere from 40 to 90%. So if you bought a lot of stuff during the COVID times and you haven't, looked at your portfolio in almost 2 years, that's you're probably down a lot of money on some of those stocks. Not saying they can't come back, but just based on what the Fed is doing, and we've kind of covered this in the past, a lot of those most likely will not get back to their highs, just for again the whole interest rate thing really affects the long-term profitability of especially speculative companies. So you want to definitely want to look at your portfolio. If you did a lot of buying during COVID, you're probably down a lot now, but you can still maybe cut some losses now and move that money either to cash or into better investments.
We got a question that came in and said it would be interesting for us to go through prior picks and tell members if our view on some or any of them have changed. You know what? We accept that challenge.
A good idea. Yeah.
It won't be immediately, but if you're a member of IAA, you know what? Tell you what we're going to do. And see, if you tell us what you want, we'll do it.
We'll do it.
We'll
Right.
make this our hot seat. So for our hot seat, we'll put the IAA picks in the hot seat, and we'll run through them and kind of tell you which ones we don't believe in anymore, which ones we're to the moon and back. So thank you for the comment. Real time game change. We for our hot seat, we'll go through some. It's 2 years worth of stock, so we can't go through all.
Right.
But we will put ourselves in our portfolio picks in the hot seat. Done and done. So next Saturday, 6 p.m. Leon and I will have our portfolio in the hot seat, going through as many as we can. All right.
Good idea.
Any members who have questions about some of those stocks in that section, make a note of it and ask us, and we'll give you real time opinions on it inside the portfolio. Thank you for that.
Yeah, definitely. Yeah, that's a.
I can't see who said it, but thank you. So we're on
Facebook.
Yeah, and again, like I said, everybody, we're here for you as much as we can be, and we don't know what you want or what you're requesting unless you tell us. And when you do, here are the results.
Just the one last point is so we're always saying buy quality, buy buy certain stocks in this environment. So we posted inside our membership platform the industries that over the last 48 years actually do well in rising rate inflationary environments. So if you haven't checked that out yet, log into the membership platform. It's an article in there. And you can see I think there's cool thing is it shows industries that do well and then industries that do not do well. So you kind of know what to avoid right now, and then what actually to invest in this current environment. So it's really good information.
And for any of you all who are not IEA crypto bulls, or you're not in the Portfolio Panthers, you missed a fire conversation on Monday. And normally I don't say this, but we had members like texting us like, that was great. We found some investments that are yielding over 40% rate of return annually. And
and we found some that are yielding. I mean, we haven't done our full research.
I know I was going to say it,
but some of them are yielding 6% and 8% per day, up to like 200-300% per year. I mean, it's just again the crypto world. Again, we're not saying we haven't done our deep research into it yet, but we are going to, because if there's a place that we can make 6% per day, or maybe 100%, 200% per year. For our crypto just sitting, we're all over it. So yeah, it was a really good discussion.
Monday was fire. Like if you weren't there, you really need to think about what you're trying to do with your portfolio in this market.
Yeah, any place you can get yield or returns in this market is a uber plus. So that's why we're really digging down deep into things that we can get yield from, while the market is just kind of doing its thing until we get past all this craziness. And like I said, the Federal Reserve is going to be raising rates into next year. So not saying we're going to be going through this for the next year. I have no idea. I'm just saying the Fed having their effect on the market is going to last, good or bad, for at least the next year and a half. At least another year. By mid next year, they're saying they should be done. So
even if it goes a year and a half, you're going to put us right into election season, and the market tends to be pretty volatile during any election season. And I think this one is going to be really stressful. So, you have to have a strategy. People have a strategy. If you're out there guessing, and this is the thing, you never hear Leon and I say if you're part of IAA, you're just going to win. Like, we don't say that. We just simply say we are a support group, because sometimes we need the support. Like, this market is rough. It's a lot of things happening, a lot of moving parts. We're just doing what we can to make sure those that want to, really prosper. And sometimes prospering just means you're not losing as much as you would be if you weren't with us. It's not even about making money. It's just about not losing as much as you would on your own. Because this is that moment where you make some mistakes, because emotions are overriding logic. This is that moment. This is the time. It is really happening real time, where you're going to make some decisions and you're going to regret them in 5 years. Like, you are going to literally be somewhere wanting to vomit because you did something that was just totally not right. So if we can help, we're here. And that's it for us today. We will put our picks into the platform. Everybody who sent us a text that was on that phone call, and we saw the messages that you all sent out, giving kudos for that conversation on Monday. Thank you. That makes us feel good because we want to know that this is actually having an impact. And for those of you all who are reaching out with what you want to see us do, thank you, because that gives us a direction to provide the best service and information to the community as possible. So now we will take the hot seat next Saturday at 6 p.m. If you're a member, insider, or above, you will be able to participate. So thank you, everyone.